at any time. Members of the full committee who are not members of the subcommittees on financial institutions and consumer credit or terrorism and illicit finance may participate in today's hearing. All members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This joint hearing is entitled Legislative Proposals to Counter Terrorism and Illicit Finance. I now recognize myself for 2.5 minutes to give an opening statement. I want to thank everyone for joining us today. Today's joint hearing will examine legislative proposals to combat money laundering, terrorist financing, human trafficking, and other illicit activities within our financial system. Nearly 50 years old, the Bank Secrecy Act was designed and passed before the emergence of the common technology we take advantage of today. From the very basic, like how a currency transaction report is filed, to the extremely complex, including what information is most useful to the U.S. Financial Intelligence Unit, the BSA framework needs modernization. The Office of National Drug Control Policy estimates that Americans spend over $65 billion per year on illegal drugs, yet seizures by law enforcement are less than $1 billion per year. Overwhelmingly, the proceeds from drug trafficking escape detection in the U.S. financial system. To be clear, this issue is not created by a lack of effort from law enforcement or financial institutions. In fact, we spend billions of dollars annually on AML, CFT efforts. Illicit finance is ever-changing and ever-evolving, which requires financial institutions and law enforcement to detect new methods in a fluid environment where every action from law enforcement is countered by criminals. The solution is providing these entities with the tools they need to better detect, report, and pursue illicit activity. This includes modernizing the current framework to ensure that emerging forms of financial technology can be secure and accountable, and that Treasury's Financial Crimes Enforcement Network can utilize the same technology to streamline regulatory and intelligence work. As it stands today, the current AML CFT compliance regime is a practice and procedures whose policy, goals, supervision, and enforcement need more clarification and coordination to prevent undue regulatory burden on financial institutions while strengthening national security interests and enhancing law enforcement investigations. Reporting under the BSA was meant to provide information to law enforcement that is of a high degree of usefulness. However, in 2016 alone, over 15 million currency transaction reports and over 1.5 million suspicious activity reports were filed with the federal government. This influx of reports drowns out the actionable information with white noise, allowing criminal activity to go undetected. Without a serious review and modernization of our anti-money laundering, the AML, and CFT, combating the financing of terrorism framework, the United States will continue to be deficient in its ability to combat terrorism and terror and illicit financing. The Counterterrorism and Illicit Finance Act is a legislative proposal compiled after over 10 months of hearings, briefings, and feedback from stakeholders, academics, and administration officials from 2 subcommittees of jurisdiction. It identifies the current weaknesses in how the AML system operates and includes reforms designed to promote innovation in detection strategies, establish AML and counterterrorism financing priorities, identify ownership of shell companies, and streamline reporting requirements. The consequences of money laundering are significant to financial systems, economic development, and governments worldwide. As criminals invent new methods of moving illicit funds through our financial system, settling for the status quo is unacceptable. Delaying these reforms puts American lives at risk from drug cartels, human traffickers, organized crime, and terrorism. In today's hearing, I hope our witnesses can discuss how we are currently combating terrorism and illicit finance, and how the legislation before us will improve the existing system. Would also welcome any feedback on how to improve the reforms proposed in the Counterterrorism and Illicit Finance Act. Inhibiting criminal activity isn't a new problem, but I hope that today we can help inform the subcommittees on the importance of reforming the current law. Again, I would like to thank our witnesses for being here today and look forward to their expert testimony on this important issue. I now recognize the ranking member of the Terrorism and Illicit Finance Subcommittee, the gentleman from Colorado, Mr. Perlmutter, for 2.5 minutes for an opening statement.
Thanks, Mr. Chair. And thanks for having this hearing. And to our panelists, thanks for being here today. This is a subject we've been studying pretty thoroughly. I think we all understand that we need to make some changes and to modernize some statutes that have been in place since the 70s and the 80s. We don't want the financial institutions to make work and go through certain routines that really don't help us as a nation, stop crime, stop terrorism. There are benefits to it, but we can be much more effective with a lot less sort of routine work. And that's really what this committee would like to see done. And that's why we're going to be taking up the bill at some point that Mr. Pierce just mentioned, the illicit, what do you call it? Whatever it is, Counterterrorism and Illicit Finance Act. So, very interested in your testimony today, a belief by both sides of the aisle that we have steps that need to be taken. I would encourage the panel, and I ask you to take a look at a couple sections that I'm going to want information about, which is the expansion of the crimes for which there would be information sharing. We have a letter from the defense bar, which I would ask to enter into the record, complaining about
that objection.
The pretty dramatic expansion of the crimes covered, as well as the section that Mrs. Maloney has been suggesting on beneficial ownership. And we have a couple letters that I would ask to be entered into the record, one by Angel Capital Association, which is joined in by the National Association of Manufacturers, NFIB, National Venture Capital and Real Estate Roundtable, and the Chamber of Commerce, as one of the letters, the other being the letter from the Bar Association.
Without objection.
Complaining about what they believe is a lot of limitations, a lot of confusion in terms of definitions, and also changing the risk from sort of the banking community to the legal community. But I appreciate all of you being here today, look forward to your testimony, and with that I yield back to the chair.
Gentleman yields back. The chair now recognizes the Vice Chairman of the Financial Institutions and Consumer Credit Subcommittee, the gentleman from Pennsylvania, Mr. Rothfuss, for 2.5 minutes for an opening statement.
Thank you, Chairman. I want to commend my colleagues on this committee for their efforts on the bills that we are going to discuss today. Strengthening and modernizing our Bank Secrecy Act anti-money laundering framework is essential if we want to counter the very real security threats that we face and disrupt the heartbreaking human trafficking and drug trades that destroy so many lives. Just before we went home to spend time with our families this Thanksgiving, I traveled to Afghanistan and Iraq to visit our troops and get a first-hand update on the challenges we face in that part of the world. The flow of illicit cash, whether generated through the sale of drugs or weapons, bogus trade transactions, or through human trafficking, continues to provide a lifeline for terrorist groups and rogue actors. This fuels instability throughout the Middle East, and it makes the jobs of the brave men and women of our military much harder. Of course, as many of us know, this problem extends far beyond that part of the world. Bad actors like Hezbollah are involved in illicit finance and trafficking all over the world, including in Africa and closer to home in Latin America. The violence and corruption that they support in the countries in which they operate is unacceptable. And the drugs they pump into our communities, which ruin so many lives, needs to be stopped. I am more convinced than ever that this committee's efforts to interrupt the finances of these bad actors will ultimately save lives. These bills, and especially the Counterterrorism and Illicit Finance Act, represent a promising start as we begin this process. I'm looking forward to hearing from our witnesses today about how we can build on a more potent BSA-AML regime that makes the best use of scarce public and private sector resources. It is clear to me that our existing framework puts heavy burdens on financial institutions and appears to emphasize compliance with rigid standards over efficacy. This imposes significant costs on financial institutions and takes resources away from other important functions. We need to be looking at how technology, innovation, and greater cooperation can be employed to yield better results in this fight. I thank the Chairman. I yield back.
The gentleman yields back. The chair now turns to the introduction of our witnesses. We welcome the testimony of, first of all, Mr. Daniel Bly. Since 2010, Mr. Bly has been Executive Vice President and Chief Risk Officer at Webster Bank Financial Corp. and Webster Bank based in Waterbury, Connecticut. Prior to joining Webster, Mr. Blay worked at ABN AMRO and the Royal Bank of Scotland from 1990 to 2010, having served as Managing Director of Financial Institutions, Credit Risk, and Group Senior Vice President, Head of Financial Institutions and Trading Credit Risk Management. Mr. Blay earned a BA from the University of Michigan in Ann Arbor and an MBA from London Business School in London, England. Mr. Blay also served on the Board of Directors of Junior Achievement of Western Connecticut. Mr. John Byrne. Mr. Byrne is the president of Condor Consulting in Centerville, Virginia, a financial services regulatory firm handling due diligence issues and training for government and the private sector in anti-money laundering, financial crime, and regulatory oversight. From 2010 to October 2017, Mr. Byrne was the executive vice president of the Association of Certified Anti-Money Laundering Specialists, the largest and most prominent global AML trade association. Mr. Byrne has also held several senior positions at Bank of America in Washington, D.C., with responsibilities in AML strategies and regulatory relations. Mr. Byrne earned a BA degree from Marquette University in Milwaukee and his law degree from George Mason University. Mr. William J. Fox serves as Managing Director of Global Financial Crimes, Corruption, and Sanctions at Bank of America Corporation. Mr. Fox has served at Bank of America since 2006. Fox joined Bank of America from Financial Crimes Enforcement Network, FinCEN, where he served as the FinCEN Director. Prior to his appointment as FinCEN Director, he served as the Treasury's Associate Deputy General Counsel, Acting Deputy General Counsel. After September 11, 2001, he also served as the Principal Assistant and Senior Advisor to the Treasury's General Counsel on issues relating to terrorist financing and financial crime. He was recognized for his work on those issues with the Meritorious Rank Award in 2003. Mr. Fox joined the Department of the Treasury in December of 2000 as the Acting Deputy Assistant General Counsel for Enforcement. From 1988 to December 2000, he served as the Bureau of Alcohol, Tobacco, and Firearms. Mr. Fox received his bachelor's degree in history and a law degree from Creighton University in Oklahoma. Stephanie Osfeld is the deputy head of the U.S. Office of Global Witness. Global Witness is an international nonprofit established in 1993 that examines corruption, poverty, and human rights. During her time at Global Witness, Ms. Osfeld has focused on corporate transparency, anti-money laundering law, and the effective enforcement of anti-bribery and AML law in the oil, gas, and mining sectors. Ms. Ostfeld also served as the executive committee of the Financial Accountability and Corporate Transaction Coalition. Ms. Ostfeld has also served as senior policy advisor at the Global AIDS Alliance and the American Jewish World Service. Ms. Ostfeld earned a Bachelor of Science degree in engineering from the University of Pennsylvania and a master's degree in human rights from the University of Denver. Mr. Chip Ponce is the president and co-founder of the Financial Integrity Network. FIN is a strategic and technical advisory firm dedicated to assisting its clients around the world achieve and maintain the financial integrity needed to succeed in today's global economy and security environment. Chip Ponce also serves as senior advisor of the Center on Sanctions and Illicit Finance, CSIF, at the Foundation for Defense of Democracies. From 2002 to 2013, Mr. Ponce served as the inaugural director of the Office of Strategic Policy for Terrorist Financing and Financial Crimes, OSP, and a senior advisor at the U.S. Department of the Treasury. As a senior advisor from 2002 to 2006, Mr. Ponce assisted Treasury leadership in developing the U.S. government's post-9/11 strategy to combat terrorist financing. Mr. Ponce graduated with honors from the Harvard University and Johns Hopkins School of Advanced International Studies, and he holds a Juris Doctor from the Georgetown University Law Center. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made part of the record. And Mr. Blay, you're recognized for 5 minutes.
Chairman Lukemeyer and Pierce and members of the subcommittees, thank you for the opportunity to present testimony on the need to modernize and improve the Bank Secrecy Act. I'm Daniel Bly, Chief Risk Officer of Webster Bank, founded in 1935 and headquartered in Waterbury, Connecticut. Webster has $26 billion in assets and serves communities throughout New York and New England. Today I'm representing the Mid-Sized Bank Coalition of America, the voice of 83 banks with headquarters in 34 states, MBCA banks are primarily between 10 and 50 billion in assets and support customers through more than 10,000 branches in all 50 states. MBCA members maintain combined deposits in excess of 1.2 trillion and are typically the largest local bank serving the basic banking needs of communities. The Bank Secrecy Act is amongst the most complicated and costly requirements with which a bank must comply, and it's one of the highest priorities for mid-sized banks. MBCA banks deeply appreciate the importance of this regulation and our role in helping law enforcement identify and shut down illicit financial activity. We're committed to ensuring a successful program that reduces financial crime and protects our customers and our banks. To this end, MBCA banks have collectively invested well over $500 million in technology, and our average estimated to each spend upwards of $8 million annually on staff and support. Nearly all of the larger MBCA banks are using or are moving into more sophisticated technology for detecting suspicious activity well beyond the previous tools. The high cost is particularly concerning for mid-sized banks that have significantly less scale than the large banks against which to spread these costs. MBCA applauds the ideas introduced with this bill and believe it will improve the program benefiting businesses, consumers, law enforcement, and banks. And I'd like to share our perspectives on 4 key components: reporting thresholds, the proposed review of efficiency and effectiveness, changes to beneficial ownership, data collection, and the role of Treasury. The proposed change in reporting thresholds would be immediately and positively impactful for increasing information usefulness and reducing burden. We estimate, if implemented, the SAR filings at mid-sized banks would reduce by 8 to 10%, and CTR filings by 50 to 80%. Together, this translates to an estimated 8 to 10% of BSA staffing costs that are working solely on the 500,000 small dollar reports that are estimated to be filed by mid-sized banks annually. Section 3 focuses on improving the process, and we believe all of the ideas included would achieve the objective. MBCA members are happy to share other specific ideas as well. One such idea is to establish a more structured or automated template with limited free text format. This would reduce complexity and could lower preparation time by potentially half or more without sacrificing usefulness. Another idea is to create a shorter form automated filing approach for small dollar reports. One concerning fact to be considered with this review is that the false positive alert rate for mid-sized banks is estimated at over 90%, meaning detailed reviews of an excessively high number of transactions that are ultimately deemed to be unimportant. The proposed change to the beneficial ownership data gathering model is necessary, as the existing regulation effective in May 2018 is suboptimal in many ways. It allows for uneven application, it creates data integrity risk, and it puts unnecessary burden on businesses to supply data to multiple institutions. The proposed public sector-led approach efficiently solves for these challenges. MBCA banks appreciate the introduction of the expanded role of Treasury in steering supervision and support for innovation. This could increase transparency and consistency, elements that are critically needed. We hope this would also help reintroduce the risk-based approach to supervision that's been missing in recent years, even though it's captured in the existing act. We believe better solutions can be built if there was more coordination between Treasury, law enforcement, regulators, and the financial institutions. In summary, MBCA members appreciate and support this thoughtful bill. It successfully addresses the most important challenges in the current act, and it makes it better. It will benefit individuals and businesses, will strengthen law enforcement efforts with better information, and will reduce burden for banks so we can better serve our customers. Thank you again for the opportunity to testify, and I'm happy to address any questions or concerns of the committee's interest.
Thank you. Mr. Byrne, you're recognized for 5 minutes.
Chairman Pierce and members of the subcommittees, I'm John Byrne, and I've been part of the AML community for over 30 years. It's clear to me that the private and public professionals who have financial crime prevention functions are all dedicated to stopping the flow of illicit funds. We may disagree with how to achieve this collective goal, but no one can challenge the commitment of all of those involved. It's therefore so important that improvements are considered to what constitutes the AML infrastructure, all participants be actively consulted. I have seen all too often that the focus of the Bank Secrecy Act appears to be mainly regulatory compliance. and not getting immediate access to law enforcement information they need for investigations and deterrence of criminal abuse of our financial system. I've covered many of the provisions in today's proposal in my testimony, but I will highlight only a few. Sections 2 and 3. CTRs have been part of the AML fabric since 1972 and SARs since 1996. There is certainly value for law enforcement in both reporting regimes, but I feel that SARs are, without a doubt, more essential to successful investigations, prosecutions, and overall detection of financial crime. The subcommittee should be commended for attempting to review and improve these requirements. I would respectfully recommend, however, that there are elements in both reporting regimes beyond the dollar thresholds that should be considered for improvement, and they are identified in my testimony. While I respect Mr. Bly's views that he just espoused, in discussing the ideas of raising the threshold on CTRs, I talked to a number of institutions who said that for them, it may have little impact on burden because automated systems have been implemented to assist in the identification of reportable transactions. I do not have enough data on all impacted filers to assess the pros and cons of raising the thresholds, so if the subcommittees intend to propose such a plan, I would encourage that all participants in the filing process, especially law enforcement stakeholders, be included in discussions around any potential change. However, to both simplify and ensure law enforcement utility, I would submit there's a need for a new call to dramatically change cash reporting, and that is eliminate all CTRs and have impacted financial institutions report cash activity directly to FinCEN. With this change, law enforcement would get direct access to cash activity at the levels decided by Congress with input, obviously, from law enforcement, and they could develop metrics on what activities, types, and other factors are important to the detection of all aspects of financial crime. It's clear to me that a change this massive couldn't be done overnight, so creating several pilot programs may be the best option. The subcommittees are also looking at suspicious activity reporting thresholds and adjusting those. I will leave to current members of the financial sector to comment, but I'll say this. Many banks file SARs in the hopes that law enforcement will actually start an investigation. If the dollar amounts are raised, will there be less consideration to lower dollar frauds and financial crime? Also, as we know from our law enforcement partners, terrorist financing models have often occurred at extremely low dollar amounts, and so will we be losing valuable financial intelligence? Section 4. The subcommittees are also to be commended for the inclusion of Section 4 that fixes a long-held barrier to enhancing information sharing. This is a welcome expansion and should result in more effective reporting and eventual detection of many forms of financial crime. Sections 5 through 7 on the no-action process, I think that will go a long way if you create that to prevent what I would call policy as rule that I talk about in my testimony. So that section, I think, deserves a lot of support. Section 7 highlights the use of technology, and several members have referenced that already today. One of the common complaints I've heard is that all too often regulators make it difficult for financial institutions to experiment with new tools for the fear of regulatory criticism during transitionary periods. This section may alleviate those problems. Section 9, one of the major recent challenges to the financial sector is the impending CDD rule that's required to be implemented next May. With the focus from FATF and the media outcry from the Panama and Paradise Papers, we know that there's universal focus on the mechanisms used to obscure beneficial ownership of corporate vehicles. A direct obligation to file with FinCEN is indeed a welcome proposal. And then lastly, I would be remiss if I did not also reference the collateral damage that can and does occur with confusion regarding risk in today's AML regime. When the financial sector receives limited advice and counsel regarding how best to manage risk, the logical response by some institutions is to exit or not onboard certain classes of customers. This concept, de-risking, impacts access to the traditional banking sector and has harmed victims in conflict zones from receiving funding for water, utilities, and other resources. These subcommittees can provide a valuable service to the AML and global communities by adding to the studies and reports in the bill an update to the challenges regarding financial access. In conclusion, I would thank the subcommittee for this opportunity to offer my views on the need to change after 30 years of AML. The key going forward is to, whatever changes are made, ensure that improvements occur through private-public partnerships. Thank you for this opportunity, and I'm also happy to answer any questions.
Thank you. Mr. Fox, you're recognized for 5 minutes.
Thank you.
Thank you, Mr. Chairman, and Ranking Member Perlmutter. Thank you very much. And distinguished members of the subcommittee, I really am proud to be here today on behalf of the Clearinghouse, where I serve as the chair of its AML Summit Committee. I have a few remarks, and then I'd like to make to the subcommittee this afternoon. First of all, we would like to commend the House Financial Services Committee and the subcommittees that you chair on your leadership regarding our nation's anti-money laundering and counter-financing of terrorism regime, a regime that we believe is critical to our national security. The enactment of the USA Patriot Act more than 16 years ago was the last time that the Congress conducted a broad review or adopted significant amendments to our national regime. The current suspicious activity reporting regime remains largely unchanged since it was developed in the mid-1990s. Similarly, large cash reporting regime remains largely unchanged, if not unchanged at all, since the Bank Secrecy Act was originally passed or enacted in 1970. Just think of what's happened since that time. Today, most banking business can be conducted from your mobile phone. Both money and information move in nanoseconds. It's very simple and common to move money across borders in ways never seen before. Even the concept of what money is changing. Today, anonymous cryptocurrencies are traded outside the formal financial system in a way that makes it increasingly difficult to know the source and purpose of the funds that have been moved. The Clearinghouse believes that the mechanisms through which our member institutions discharge their responsibilities under the regime are highly inefficient and outdated. We believe it's time to take a fresh look. A core problem with the current regime is that it is geared toward compliance expectations that bear little relationship to the actual goal of preventing or detecting financial crime. These activities require different skill sets, tools, and work. All of this begs a question. What is the ultimate desired outcome of our nation's AML-CFT regime in a post-September 11th, 2017 world? The Clearinghouse believes we should start by defining clear and specific measurable outcomes or goals for each component of our national regime, including the anti-money laundering programs that exist in financial institutions. Progress toward achievement of these goals should be measured and reported. For these outcomes or goals, priorities should be set for the components of the regime, similar to the prioritization that occurs in our intelligence community. We believe defining and measuring desired outcomes would change the focus in financial institutions from one that is focused on technical compliance to one that is focused on achieving desired and measurable outcomes of the regime. In other words, the programs would be effective. To that end, in early 2017, the Clearinghouse issued a report offering recommendations on redesigning our national regime to make it more effective and efficient. Many of the concepts found in the report are reflected in the Terrorism and Illicit Finance Act before the subcommittees today. I will quickly go through a couple of the recommendations that the Clearinghouse is making. First, relating to prioritization, the Clearinghouse believes that the Treasury should take a preeminent role in setting policy, measurable outcomes, coordinating and setting priorities, as well as in examining institutions' compliance with and enforcing our national regime. Treasury is uniquely positioned to balance the sometimes conflicting interests relating to national security, the transparency and efficacy of our global financial system, the provision of highly valuable financial intelligence to the right authorities, financial privacy, financial inclusion, and international development. Second, regarding rationalization, the Clearinghouse supports the draft legislation study of current BSA reporting requirements, enhancements to information sharing, and enterprise-wide suspicious activity information sharing, as well as the inclusion of a federal beneficial ownership record-keeping requirement. Due to our size and geographic footprint, at Bank of America, we are one of the largest filers of currency transaction reports and suspicious activity reports in the United States. Other than anecdotes about the usefulness of our reporting, we do not receive direct feedback from the government on whether the bulk of our reporting is useful or not. At Bank of America, in order to try to measure the usefulness of our reporting, we have developed a metric tracking when we get follow-up requests from law enforcement or regulatory agencies for backup documentation relating to our reports. Today, we receive such requests in connection with roughly 7% of the suspicious activity reports that we file. From my time in the government, I know that these reports are used in many different ways, most of which do not require the backup documentation that you can get through the SAR process. Accordingly, I think our reporting is far more effective than the metric would say. However, I do not know that for sure. Measuring the usefulness of suspicious activity reporting would also help the government rationalize whether the reporting, which may be technically required under the law, is ultimately useful in achieving the goals of our AML-CFT regime. We're pleased to see the draft legislation would require a Treasury-led study to review the current reporting regimes under our AML-CFT regime, and we believe that that's really important. The third area we would like to cover is innovation. The Clearinghouse supports the language in the draft bill encouraging innovation. We have some ideas on our testimony, and we covered that pretty well there. With that, Mr. Chairman, we're ready to take questions.
Thank you, Mr. Fox. Ms. Ostfeld, you're recognized for 5 minutes.
Thank you. Good afternoon, Chairman Pierce, Ranking Member Perlmutter, and the distinguished members of the subcommittee. Thank you for holding this important hearing and inviting Global Witness to testify. We're an investigations and advocacy organization that seeks to expose and break the links between natural resources and corruption and conflict. For the last 6 years with Global Witness, I've been looking at how illicit funds flow through the system. And there are 3 things that have really struck me. Now, the first is that in basically every case of corruption we've ever investigated, anonymously owned companies have been used to move and hide money. The second thing I've noticed is it's not just corruption. Anonymously owned companies are what unite all crimes that generate money. But perhaps what is most striking is how easy and common it is to set up an anonymously owned company right here in the United States. We are at the heart of this problem. So Global Witness is very encouraged that the committee is interested in advancing beneficial ownership legislation and strengthening U.S. anti-money laundering laws. A bill that is fit for purpose needs to collect the right information, make it accessible to the stakeholders who need it, and ensure that the beneficial ownership information is kept up to date. The discussion draft does some of this, but we have a number of concerns. So my written testimony contains 14 detailed recommendations of how you could strengthen the proposed legislation, but I'm going to use the remainder of my time to briefly discuss 7 of them. So first, with respect to Section 9, the discussion draft favors banks' access to beneficial ownership information while severely limiting domestic law enforcement's access, because it only allows federal law enforcement to access beneficial ownership through a criminal subpoena. This means state and local law enforcement do not have direct access to it, even though the bulk of U.S. criminal investigations happen at the state and local level. It also means that federal agencies that only have civil and administrative subpoenas aren't able to access it either. Law enforcement officers need to be able to acquire company ownership information quickly and easily without alerting the subjects of the investigation. The bill needs to ensure domestic law enforcement has access, and this includes federal, state, and local, to FinCEN's database of beneficial ownership information. At a minimum, the language in the discussion draft needs to be amended to allow civil, criminal, or administrative subpoenas or summons, or the equivalent at the state, local, and federal level. Second, the discussion draft also severely limits foreign governments' access to beneficial ownership information. It excludes cases that involve civil misconduct, like securities violations, business misconduct, patent and copyright violations, cybersecurity violations. But it also goes a step further, that there's language in the discussion draft that will severely limit its utility to foreign governments when they're trying to access beneficial ownership information. It means they can only access it for an intelligence purpose and not for a law enforcement purpose. For it to serve the law enforcement purposes of foreign governments, beneficial ownership information needs to be able to be introduced in court. This means it could be discoverable at a later date. So as written, it appears to prevent this, so it has little utility to a foreign prosecution. So third, the discussion draft appears to favor foreign owners over US applicants. It must require foreign nationals to file their beneficial ownership information with FinCEN, and this needs to include submitting a scanned copy of the relevant pages of their non-expired passport to FinCEN. Fourth, an enforcement mechanism should be added to the discussion draft to ensure that applicants file beneficial ownership information with FinCEN. As written, it doesn't have one. Fifth, banks should implement the customer due diligence rule on time in May of 2018. There's a clearly identified need for banks to be collecting beneficial ownership information for their customers so that they can assess risk. If this proposed legislation becomes law, regardless of how long Congress gives FinCEN to set up the new database, it is going to take a significant amount of time to get it up and running and populated with the required beneficial ownership information. Adequate customer due diligence within banks, which is what the regulation requires, cannot stop in the interim because the bank's need to know its customers does not stop. Sixth, the CTR and SAR reporting thresholds shouldn't be raised as proposed in the legislation, as it would create a record-free zone for a much larger number of transactions. It would lift the burden on wrongdoers like drug traffickers and terrorists who must deal in cash while doing very little or nothing to relieve any burden on legitimate commerce. And seventh, finally, while banks play an important role in keeping dirty money and terrorist finance from entering the US financial system, they shouldn't be alone in bearing that responsibility. Those seeking to move suspect funds utilize the services of a wide range of professional gatekeepers to the financial system who handle large sums of money. Company formation agents, the real estate sector, and transactional lawyers should also be required to know with whom they're doing business and engage in efforts to prevent their services from being used to launder dirty money. So thank you for inviting me to testify today and share my views on this important issue. Global Witness looks forward to working with you and your colleagues on the subcommittees to strengthen the U.S. anti-money laundering framework so we can stop the U.S. from being a safe haven for illicit money and terrorist financing from around the world. Thank you.
Thank you. Mr. Ponce, you're recognized for 5 minutes.
Thank you, Chairman Pierce, Ranking Member Perlmutter, and distinguished subcommittee members. I'm honored to testify before you today. We are confronting a pivotal moment in our 48 years of combating illicit finance under the Bank Secrecy Act, more commonly known as the BSA. As our counter-illicit financing efforts have become more important, they have also become increasingly challenged. This is provoking fundamental questions, including about effectiveness, efficiency, cost, roles, and responsibilities. The combination of these developments necessitates significant reform of the BSA and the expanded AML-CFT regime it supports. This hearing marks an important and welcome opportunity to discuss how best to pursue such reform. I am grateful for the leadership of these subcommittees in addressing these issues for the reasons that my colleagues here have spoken. The draft Counterterrorism and Illicit Finance Act proposes bold and necessary changes required to address many of the urgent challenges we face. Challenges in combating all forms of illicit financing, and in protecting the integrity of our financial system and our national security. Such proposed legislation also reflects the congressional leadership required to take action to secure these vital interests. However, Congress should amend this proposed legislation to further strengthen the effectiveness and to further promote the efficiency of our AML-CFT regime. My recommendations for such amendments are explained at length in my written testimony and may be summarized as follows. First, incorporate into the proposed legislation a new section expanding the objectives of the BSA to explicitly include protecting the integrity of the financial system and protecting our national security. Such clarification of purpose will recognize the heightened importance of what we do through our AML-CFT regime and will help guide our efforts moving forward. Second, incorporate into the proposed legislation a new section. First, to restructure and enhance financial investigative expertise at the Department of the Treasury, and second, to provide protective resources to law enforcement, the intelligence community, and counter-illicit financing targeting authorities. Such action is required to more effectively and consistently pursue illicit financing networks. It is also necessary to fully capitalize on the investments that our financial institutions are taking to support these efforts. 3, strengthen Section 3 of the proposed legislation to direct a more aggressive approach for Treasury to enhance financial transparency. Such action is required to address long-standing and substantial vulnerabilities in our financial system. Such action is also necessary to fully leverage new technologies and providing more information at a lower cost to our financial institutions. 4, strengthen and expand the information sharing provisions in Sections 4 and 7 of the proposed legislation. This action will enable our best financial investigators from the government to work directly with our best analysts in the industry to attack illicit financing networks. 5, strengthen Section 6 of the proposed legislation by directing Treasury to develop and expand initiatives and consultations with industry. Such initiatives and consultations should inform priorities for U.S. policies across the full spectrum of combating illicit finance, money laundering, terrorism financing, sanctions compliance, bribery, and corruption. Such consultations should also stimulate operational pilots to capitalize on expanded information sharing authorities and capabilities. 6, amend Section 9 of the proposed legislation to support urgent implementation of Treasury's CDD rule while supporting urgently the adoption of company formation reform. Both of these actions are essential to our national security. This has been discussed at length through 2 decades of testimony, including in front of this committee. It's not an option to pursue company formation reform or customer due diligence by financial institutions. For reasons that have been elaborated at length in my testimony and from testimony from others for decades, both of those actions are necessary. I'm very happy to take questions on that issue. I would like to close with a word of thanks to all of you, to my friends, partners, colleagues across the AML-CFT community, and to my family. My family has given me the freedom to contribute to this mission, both in government and in private practice. Finally, I would like to recognize and welcome Maddie Ponce, an 11-year-old reporter from the Hunterswood Elementary School, and urge her to continue to educate the next generation about the importance of public service. Thank you.
Thank you. The chair now recognizes the ranking member of the full committee, the gentlelady from California, for 2.5 minutes for comment, opening statement.
Thank you very much for convening today's hearing and for the opportunity to discuss 2 proposals. One, that sharpens the nation's focus in countering human trafficking, and another that would make broad reforms in an effort to modernize the Bank Secrecy Act. This latter proposal aims to achieve 2 important objectives. 1, strengthen the efficacy of our current anti-money laundering framework, and number 2, reduce any undue compliance burdens. These are worthy objectives and are reflected in a number of important provisions in the bill, including sections that would address vulnerabilities associated with anonymous shell companies and provide financial institutions with greater feedback. Nonetheless, a number of other provisions in the discussion draft failed to strike the appropriate balance and warrant additional scrutiny. In particular, while compliance issues that community banks and credit unions face is an important consideration, we should, for example, be careful not to lift SAR and CTR reporting thresholds if doing so undermines law enforcement's ability to stop bad actors. Similarly, while the no action letter concept and encouragement of the use of technology may provide welcome clarity for institutions, these provisions need to be more carefully scoped to minimize potential harm. Additional care must also be given to address privacy and civil liberties concerns before altering the information sharing powers under the Patriot Act. Finally, more must be done to close other known vulnerabilities in our anti-money laundering rules, especially in the real estate sector. So I look forward to the opportunity to work collaboratively to perfect these measures. And I thank you so much, Mr. Chairman. I yield back my time.
Gentlelady yields back. We turn now to questions, and the chair now recognizes himself for 5 minutes for questions. Mr. Byrne, in the testimony before the Senate Judiciary Committee yesterday, the Assistant Attorney General Kenneth Blanco stated that the pervasive use of front companies, shell companies, nominees, and other means to conceal the true beneficial owners of assets is one of the greatest loopholes in this country's AML regime. Financial Action Task Force, in its December 2016 evaluation of the United States anti-money laundering efforts, identified the lack of requirement for the collection of beneficial ownership information as the most critical vulnerability in our efforts to combat money laundering and illicit finance. This law has allowed criminals to hide their identities and abuse our financial system through anonymous shell companies. So the rest of the world is addressing the question far more thoroughly than we are. Is our country, the United States, at risk of becoming the haven for criminals?
I don't think there's any question, Mr. Chairman, that the lack of information gathering that currently exists is more than problematic. I think we've always talked about, and Chip alluded to this in his testimony, we've talked about in terms of the CDD rule being one part of this and beneficial ownership part of that being separate. The fact that we have states in this country where corporate formation information is so limiting, I think does make it much easier to create these shell organizations and these front companies. So I do think, and I think the FATF is sort of focused on that as well. So I think the fact that these subcommittees are looking at making those adjustments, that there is a rule that's pending, will go a long way toward helping that. But it does, as an AML professional, it does concern me about the ease in which corporate formation issues can occur in the states to be fronts for illegal activity. Absolutely.
Just how is the information used by law enforcement if this beneficial ownership information is provided? How is that information used by law enforcement? What are the processes? What do they use it for?
For investigative purposes, to follow up, I would certainly defer to some of my other panelists, but I think there's a long history of law enforcement saying they need that information, and I know that the FBI and other organizations have come before this subcommittee and others to say how important it is to get more access to that information.
All right. Mr. Bly, in your testimony, you mentioned the CDD rule that goes into effect next May, and you comment that it's going to place an unnecessary burden on our businesses, would slow the account opening process, and would increase maintenance costs. Can you explain some of the negative impacts on businesses from the CDD rule and describe how our proposal would help alleviate those burdens while still ensuring law enforcement has the information they need?
Absolutely. There's an agreement amongst all of the mid-sized banks that collection of this data could add value from a law enforcement perspective, and the real question is just what's the most efficient way in which that information should be gathered, most efficient not just for banks, but also for all the businesses throughout the country. And we believe the public sector approach is the most efficient because it allows for better data integrity, a more efficient process where businesses only have to submit the information one time in a consistent way, and it's not impacting their ability to work with their various financial institutions. And so the combination of all those effects means it's just a more efficient and effective program. It also allows all the information to be centrally captured in one way and accessible by all those that need it in order to perform their activities.
Mr. Fox, as the Office of Comptroller of the Currency releases on an annual basis its bank supervision plan that sets forth the agency's supervision priorities and objectives for the upcoming fiscal year. I'm interested in how this process helps financial institutions prepare for their exams, and then similarly, would a similar process work for AML CFT priorities if the Treasury Department released those annually? Is that helpful for compliance obligations? Give us some input on that.
Sure. Mr. Chairman, actually, we study that quite closely because knowing the priorities of our supervisor, our principal supervisor in the United States, helps us plan and make sure that we know what the agency is going to care about and what they're likely to come and examine and ask us about, right? So it causes a focus in the institution, and that prioritization actually becomes, in many ways, the institution's prioritization. So it's very helpful for planning. I think it would be helpful in the AML space. As you know, the OCC's one of the OCC's principal priorities for the last few years has been BSA AML exams.
Thank you all. My time has expired. The chair now recognizes the gentlelady from Arizona, Ms. Sinema, for 5 minutes.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. Human trafficking is a growing multi-billion-dollar problem that demands action by the federal government and Congress. Terrorist organizations like ISIS employ human trafficking as a means of funding their operations while terrorizing and tormenting local communities. There have also been over 36,000 reported cases of human trafficking in the U.S. since 2007, and nearly 7 in 10 of those cases involve sexual exploitation. The rise of the internet changed the human trafficking landscape in the United States. Prostitution has expanded from the streets to the online marketplace where victims, many of whom are children, are traded to the world. According to the Department of Justice, traffickers make on average $150,000 to $200,000 per child. I believe we have a moral obligation to protect victims of human trafficking and a national security responsibility to cut off the financial means used by traffickers and terrorists. I'm grateful to Congressman Royce, Keating, Congresswoman Maloney, and Love for introducing H.R. 2219, the End Banking for Human Traffickers Act of 2017, and I'm proud to be a co-sponsor of this bipartisan legislation. The bill includes the Secretary of the Treasury in the President's Interagency Task Force to monitor and combat trafficking. It requires the task force to recommend revisions to anti-money laundering programs to specifically target money laundering linked to human trafficking. And I appreciate the committee's work to improve and advance the bill. My question for you, Mr. Byrne, and thank you again for being here today. Your testimony has cited the need for greater private sector expertise in the President's Interagency Task Force to monitor and combat human trafficking. Can you expand on some of the concerns you have about current practices and tell us what government might be missing?
Sure, and we do appreciate the drafting of the legislation. I think, as I said in my testimony, one of the things that perhaps the private sector hasn't done well is explained how much has actually gone on proactively against human trafficking. In my previous role with the ACAMS organization, we began a relationship with Polaris. As I think the committee is aware, it's a well-respected international anti-human trafficking organization. And what we've been able to do with Polaris, and just met with them 10 days ago, is sit down with a number of bankers that do analytics and with Polaris staff. They just recently come out with a study on new typologies on human trafficking, and to try to put those two groups together to create more red flag indicators, more examples where banks could be, and financial institutions in general, could be on the lookout to report human trafficking activity, whether it's forced labor, sex trafficking, all the different categories. So that relationship with Polaris occurs outside of any sort of regulatory requirements. Previous to that, the number of large financial institutions, including Mr. Fox's Bank of America, worked closely with Homeland Security to do something similar 3 to 4 years ago. They created a number of, again, red flags and indicators, and we published that, we meaning the trade association, we published that to the broader AML community so they could be better prepared to look for activity that could be indicators and file suspicious activity reports. So Homeland Security has done a tremendous amount of work here. They've been with Operation Blue and all the other things that the Blue Campaign and everything else that they've done have been tremendous partners. But there's a lot of private sector expertise that we are beginning to share with the public sector that I think can enhance how we look for, report, and detect this. And so there's a lot of information out there. What we're doing with Polaris will be available probably early next year, and certainly can make the committee make that information available. But you should feel somewhat comforted, as horrific as this crime is and has challenged the world for so long, that the private sector is working very diligently with both the public sector and groups like Polaris to deal with this. I would only say this about the legislation. Whatever gets, quote, required, if you consult with the private sector in terms of training and other issues, I think it would make it a better piece of legislation. But the theme makes a lot of sense that I think would go a long way to continue to help in this very challenging space.
Thank you, Mr. Byrne. Mr. Chairman, I yield back.
Gentlelady yields back. Chair now recognizes the gentleman from North Carolina, Mr. Pittenger, for 5 minutes.
Thank you, Mr. Chairman, and excuse my voice. I'd like to thank each of you for being here today. Your input, advice is very important for this committee. Would like to particularly thank Mr. Fox, Mr. Ponce, for the extraordinary role that you played in building a stronger collaboration with our partners throughout the world. And over 60 countries have benefited from your input and your direction. To that end, I'd like to ask you, Mr. Fox, that in your opinion, what do financial institutions, what type of difficulty do they have in sharing information with our law enforcement, and as it relates to similar investigations with other countries around the world? Can you speak to those challenges?
Sure, Congressman, thank you very much, and thank you for your comments. I think that the sharing of information, both vertically, if I can call it that, from the government to the private sector, and then among the private sector themselves, is one of the most important ways that we can attack illicit finance and some of the really serious problems that Mrs. Delaney was speaking about with human trafficking and things like that. I think one of the challenges that we have is that we have authority here in this country through the USA Patriot Act provisions to be able to do that. It's done above board, it's done with care, but at the same time, it's done robustly. And you're aware, Congressman, about our consortium of banks that has really made a difference in some of these areas like human trafficking and other more sensitive areas. So that's a great thing. The difficulty is sharing sort of with other governments and that sort of thing. The UK itself has developed a little bit different system. They're using a committee format, something that they call the Joint Money Laundering Investigations Task Force, the GMLIT, and that has worked well in the UK. We participate in the UK because we are there, and we think that works. And in fact, in some ways, it's nice because there's always you always have to come to the committee and you have to come with something. So there's always a topic to talk about. But other jurisdictions, it's not as easy to share information either with financial institutions themselves or vertically with the government without some extraordinary process.
Does law enforcement provide you with requests for information through 314A request or some other matter?
Well, we get the routine, Congressman, we get the routine requests that we get from FinCEN every 2 weeks. Yeah. But I think more importantly, law enforcement has really stepped up over the last year and a half, I would say maybe 2 years, with requests and with work, kind of almost joint work with 314A information. And that has made a huge difference for those investigations in those law enforcement agencies when they've done that.
Thank you. Mr. Ponce, currently it's difficult for financial institutions to share information across borders with other branches of the same institution. How does this actually create more risk in the financial system?
Thank you, Representative Pittenger, and thank you for your leadership on the task force to combat terrorism financing. You guys have done terrific work over the last several years, both here and abroad. I want to recognize that and thank you for it. The cross-border information sharing issue is central to our efforts to understand risk. When you look at how the international financial system works and the bad guys that we're chasing through it, anybody worth chasing is in several different places, different institutions, different countries, and if we're not able to connect those dots, we're in a very difficult position, whether in industry or in government, trying to figure this out. The idea of allowing a financial institution to share information with its branches, its affiliates abroad, which is captured in the proposed legislation, is overdue and will be very helpful. As I argue in my recommendations, I think there's more that we can do. Part of this challenge is cross-border. Part of this is the way that we share information and who's in the room, what kind of information we're sharing. Think of it this way. The way that the BSA was developed was transactional and reactive. We were looking for specific individuals and actors in specific institutions based on specific transactions, or vice versa. The way the system works now, we have the ability to turn the lights on. We have the ability to look at risk more systemically with more information to identify patterns of activity proactively. The more that we can do to allow our institutions and our authorities to work together with more information, using the latest technologies to understand what risk looks like and then pursue it, the more effective and more efficient we will be. Those principles are clear. The real question is, how do we get from here to there? I think what you've done in this proposed legislation to put Treasury in a position to manage this is exactly the right way to go. And there are more details in my specific recommendations, but that's the general thrust.
Thank you.
Gentleman's time has expired. The chair would now recognize the gentlelady from California for 5 minutes for a question. Whoops. I would recognize the ranking member for 5 minutes, Mr. Perlmutter.
Thanks, Mr. Chairman, and thank you to our panelists. Appreciate your testimony. So, Mr. Ponce, you're talking about exactly the purpose of this bill, that we're trying to be more effective, more efficient, bring ourselves into this century with the legislation, with the innovation that is possible. And I think both sides of the aisle are supportive of this. We've seen that there's just a lot of ineffective kind of requirements of the financial industry to try to prevent bad guys from doing bad things. We want to be better at that. One of the big expansions, however, is in Section 4, page 5 of the proposed legislation, lines 8 through 16. And it's a very innocuous section, but it's a pretty big expansion. So it says, and this, we'd change the Patriot Act, and I'd open this to all panelists, by striking terrorist or money laundering activities and inserting terrorist activities, money laundering activities, or a specified unlawful activity as defined in Section 1956C7, which seems pretty limited on its face, except if you go to that section, it's a couple hundred crimes, from endangered species to pollution to nutrition to housing to mail theft. Can somebody explain to me why we want to expand it in this fashion? Because this is a hot button spot for privacy advocates and others.
Thank you so much, Congressman Perlmutter. That's a great question. The frustration is when you look at the expansion of money laundering and money laundering predicates over the past 30 years, it's astounding. We started the BSA looking for cash, looking for drug money, looking for tax compliance. It is now clear under global standards and under U.S. law under 1956 that all forms of serious criminal activity create proceeds that then are subject to money laundering prosecution, confiscation, and pursuit. We need those authorities. They exist now in 1956. The question is, if you're trying to understand risk in the financial system, you may see something that doesn't look right. You may think it's suspicious. You may not know if it's money laundering, terrorism financing. You may not know if it's fraud. If you have to tie that information sharing request to a specific understanding of money laundering, you're going to put a chilling effect on information sharing. If you expand it to say, we already have money laundering covering everything in 1956 for a reason, enabling our financial institutions to share information even where they're not sure whether it's a predicate offense or money laundering. Is it an act of money laundering? Is it an act of crime? There's been rulings and administrative rulings from FinCEN on this that are fairly narrowly interpreted because of concerns of the way 314, the Patriot Act, was written. What is very clear in the debates over the last 16 years is that that expansion that you've read is going to enable more sharing of information around what everyone agrees is suspicious or criminal activity, but might not qualify under the narrow constriction of 314. That's the intent.
I think the concern that was raised by the defense bar was that it's just a very big expansion and that potentially, whether it's the banking institutions or some others, are now really detectives all the time. And a fear that the SARS, instead of we get more limited in SARS, we're now expanding SARS. So just a general concern for those of you to think about. The second area I'd like to talk about is really Ms. Maloney's section of the bill on beneficial ownership. And the complaint that I've received is, you know, initially, should the financial institutions be the police or the initial detectives? Should the lawyers be that, or should it be somebody else? And so, you know, I just open it up to the panel why this burden should be shifted at all, and whether or not the IRS ought to play a role. Mr. Hill has mentioned to me, well, geez, everybody sends their tax return into the IRS. Why don't we just use them as, in effect, a clearinghouse? And I just open it up in my last 12 seconds to anybody who can answer it in now 8 seconds.
Thank you, Mr. Ranking Member. I think that, listen, I think we all just recognize that the information is highly valuable to law enforcement. We think that by the financial institutions collecting it, we want the information, frankly, ourselves. We can use it to do our work, right? But the fact is, law enforcement's not going to have ready access to our data, right? Unless they have a reason to suspect that some entity is is doing something untoward, and they could subpoena. So we actually support that. I think Mr. Hill's got a really interesting idea. You know, where somebody gets, some recipient gets this. I think it should be studied and thought about a little bit, but we at the Clearinghouse support it because we think the information should be gotten, and it shouldn't be the institutions just to get it. The other thing to remember is that the institutions are going to collect to the rule, which is 25%. If it's less than that,
You won't.
so.
The gentleman's time has expired. The chair would now recognize the gentleman from Pennsylvania, Mr. Rothfuss, for 5 minutes.
Thank you, Mr. Chairman. Mr. Bly, Section 2 of the Counterterrorism and Illicit Finance Act addresses threshold updates to currency transaction reports and suspicious activity reports. Can you describe to, can you describe to us how increasing the CTR SAR thresholds would reduce regulatory burdens on financial institutions and their customers?
Certainly. Thank you for the question. And I have actually 2 answers to that. I can give you the exact numbers. You know, we do our analysis and we can see that increasing the thresholds is going to reduce the number of filings. It's a pretty straightforward calculation, and it is impactful because there are a significant number of large volume of small dollar reporting and filing that takes place. But frankly, the MBCA's view on this is not that the actual threshold level exactly or precisely is what is at stake here. It's really part of a holistic solution to improving the efficiency of the program. Having an excessive number of false positives, excessive number of filings on small dollar cash transactions is just not going to deliver valuable information that's going to be of significance. But ultimately, what we believe is best is the combination of everything. And one idea that we put out is the possibility of some form of a different form of reporting that would be more efficient and effective for smaller dollar reports. And so it doesn't per se matter whether it's a 30,000 limit or a 25,000. What matters is that it's an efficient and effective delivery of small dollar information. But we also believe that fundamentally the sheer volume that is being submitted could not possibly be used effectively for investigations. It might ultimately connect to a financial crime, but we're talking about numbers that are so extreme, it's hard to believe that it could be as valuable.
If I could move over to Mr. Fox and could give us a little more background on the SARs, can you please describe how a SAR is triggered and why certain activities, regardless of the transaction amount, trigger them?
So what we do, and what I think most institutions do, is that we have sophisticated systems or processes, if you're not big enough for systems, to really try to detect what could be unusual activity, right, for a customer. So it all starts with your customer, knowing what's normal for them, and really understanding what could be. If you see activity that just doesn't make sense for either that type of customer, or you see activity that really does look bad, then that gets escalated to an investigation where an analyst actually looks at that material and will make a judgment about whether or not it's suspicious. Suspicion is a pretty low threshold. It's one of the lowest, I think, in the federal system, but it still is a threshold. And so if we think that the facts, these are fact-based judgments, demonstrate that there is something that is suspicious, we will then move to file a report on it.
And to be clear, increasing SAR threshold should not deter filings of suspicious reports of any amount, correct?
I don't know that for sure, sir. I don't think it would with us. I think we would continue to file suspicious reports. The danger of increasing a threshold, I think, is that you could say that, you know, right now we do not file SARs unless it's extraordinary under the $5,000 threshold that exists today, right? So what we take that rule to mean is that the government has told us that they're not interested in that, right? If it's below 5,000, with some exceptions. But if we see something, look, if we see something that is odd at $100 or at $25 that we think could be related to something serious, we're going to file that SAR.
Mr. Ponce, as you know, the Counterterrorism and Illicit Finance Act details a no-action letter policy that is meant to increase certainty for institutions. How important is it that we allow financial institutions to experiment with their AML programs for the purposes of improving their efforts to identify money laundering and terrorist financing?
Thank you, Congressman. I think such experimentation is incredibly opportunistic. The compliance officers and the risk managers we have in our financial institutions are increasingly entrepreneurial. And the more that we can encourage them to think with us on how to assess and manage risk, the more effective our system will be. Giving them the latitude to do that involves two things. One, they have to be protected from downside exposure. If there is any exposure, as a general counsel for a financial institution, it's very difficult to say, I want to go play in that game where we can find bad guys if it's going to expose me to regulatory risk or to enforcement risk. It's very hard to responsibly allow that. So we have to cover the downside risk for well-intentioned and legitimate efforts to pilot new innovation. We have to do that. Second, there has to be upside for that, right? To say, I'm going to now put resources out of where I know I need them because my examiner and others are telling me, and put them in a place where I can experiment and try to be better. What's my upside in that? There are ideas that Treasury has, there are ideas that these folks have that we've talked about for literally a decade. Again, the structure of management of the BSA here is critical, and putting Treasury in a position where it can aggressively cooperate with industry in stimulating these sorts of operational pilots, I think will create a market on how better to assess and manage all the risks that we care about, from terrorism financing to money laundering to human trafficking to tax evasion to bribery and corruption.
Thank you.
The gentleman's time's expired. The chair would now recognize Mr. Lynch for 5 minutes.
Thank you, Mr. Chairman, and also the ranking member for arranging this hearing. You've been doing great work. I really appreciate it. And I want to thank the witnesses for helping the committee with its work as well. Thank you. I have to say that I think there are a lot of good things that are being raised in this discussion draft. There are one or two things that concern me on the negative side, and that is raising the cash transaction, the reportable amount from $10,000 to $30,000. And so right now, if you have a transaction $10,000 or over, you know, the bank will take identification, a license, a social security number, and make that whole report. The draft discussion wants to raise that to $30,000. Now, this is a per-day limit. So under the discussion draft, if we went to $30,000 in cash, you could literally take $179,000 in cash in transactions, and that includes deposits, withdrawals, and currency exchange. So we're changing from dollars to rubles or rubles to dollars. You can basically do $180,000 or just $179,000 in cash per week and not trip the wire for reporting if this discussion draft passes unamended. So I have great concern about that. I think that the $10,000 was there for a reason, and I know it's a 1972 standard, I think. So we need to change that. But I don't think going to $30,000 in cash per day is really warranted. I think we might want to take a little bit more cautious approach. The other thing is, I would love to have the Financial Crimes Enforcement Network personnel here at this hearing, because I've had discussions with them, the same issue. I said, do we really need all these CTRs? We've got tens of millions of cash transaction reports and suspicious activity reports. Can you even look at these? And they say they need them all. I know they're looking for a needle in a haystack. I said, but now you got this huge haystack. So I asked the folks at FinCEN, I said, do you need this? And they said, yeah, this helps us catch the bad guy. We need context. We need all those reports. That's what they tell me. But I would really like to hear, maybe in a future hearing, we have the folks whose job it is to catch the bad guys, have them come in and tell us why they need this stuff and demand of them some accountability. Because I think you're on the right track. I don't think we need all of these reports. As a matter of fact, it can bog us down by getting too much information. But I think we need to right-size it rather than blow the lid off, as might happen under this discussion draft. So So, Ms. Osterfeld, thank you very much. Again, I know we worked before on some of the anti-money laundering stuff. The report by the Clearinghouse starts with the premise that, quote, the current anti-money laundering and combating the financing of terrorism statutory and regulatory framework in the United States is outdated and thus ill-suited for apprehending criminals and countering terrorism in the 21st century. Is that really true? I mean, we deal with FATF, right? 180 countries, and they review each country at least year to year, some of them more often. Are we really doing that poorly that we have to throw out this system? Could we undermine some good things that we're doing by changing everything?
Well, thank you, Congressman Lynch. I can't speak for the Clearinghouse report, but what I can say is that we haven't updated these laws in a very long time, and investigation after investigation continues to reveal dirty money getting into our system. So while I wouldn't say we want to throw out all of our money laundering protections, there are concrete steps we could take to strengthen it. And so some of that is putting this customer due diligence rule into play in May of next year as the regulation stands. Another piece is ensuring that it is no longer possible to set up an anonymously owned company in the United States.
Right.
The rest of the world is moving on this, and while we used to be the leader, we were the first country really talking about this all the way back in 2008. But since then, the U.S. hasn't moved forward. FATF told us in 2006 we're not compliant. They told us again in December of 2016 we're not compliant, and the United States was part of developing those rules and pushing them around the world. And so you have now every EU member state has to put into practice a central beneficial ownership registry. They're all doing this. They're all in the process of.
But we are not, right?
And we are not.
All right. Well, I appreciate that. Mr. Chairman, I yield back the balance of my time.
Gentleman yields back, and the chair now recognizes the gentleman from California, Mr. Royce, for 5 minutes.
Thank you, Mr. Chairman, and I'll start again. Stephanie Osfeld, thank you very much. Let me ask you a question on human trafficking and the fact that traffickers are increasingly using the financial system in order to fund their illicit activities. And clearly, many countries are lagging behind our system here, but do you think you would be supportive of a new standard here in the State Department's Trafficking in Persons report to include whether foreign governments have a framework in place to prevent financial transactions involving the proceeds? And we're talking about severe cases here, trafficking underage girls, things like that, but what would be your position on that?
Well, thank you, Mr. Royce. I would obviously have to look at it to put forward a clear position, but yes, that makes sense to me that the State Department would report on that. What countries
if you could take a look at my legislation on this, I would appreciate it very much. And the next question I was going to ask, maybe of Mr. Bill Fox or anybody else that wanted to comment, but the Counterterrorism and Illicit Finance Act requires Treasury to issue rules permitting a financial institution to share suspicious activity reports with their foreign branches. And so here's the conundrum here. I support this concept which would improve enterprise-wide management, but my own introduced bill would expand similar SAR sharing under two conditions. The first condition would be the foreign branch or affiliate must be located in a country that is a member of the Financial Action Task Force or is part of a FATF-style regional body. And second, such country must have adequate privacy and data security protections in place. So, Mr. Fox, if you'd like to begin to opine on that, and then I'd like to hear other members of the panel.
Thank you, Mr. Royce. I agree. The Clearinghouse supports the language that's in the draft bill to be able to share. I think one of the challenges, if you just take a look at the J.P. Morgan enforcement action involving the Bernie Madoff matter, it's a classic example of what happens when information can't be shared across border for a financial institution. And so
I understand that part of the problem,
so we got
but
that.
look at it from the standpoint of the risks to allowing SAR sharing, on the other hand, with foreign branches or affiliates in certain countries. And, you know, you've got to get an appropriate way here to ensure that widespread information sharing between institutions within the same family still protects sensitive information, given some of these governments, because you can have foreign access. So that's the balance I'm looking for here, and that's why these provisions are out there in the legislation we're pushing.
I think it's a sound issue to raise. I really do. I think that we would, of course, manage the sharing of any information throughout our program and in the way that we would do things. And there may be information, if we had the authority to share actual SARs or SAR information across border, we would take a look at that and determine whether or not we were comfortable in a particular jurisdiction that information was safe and secure. Yeah. Because again, these are reports about our customers, right? We don't want that out. We don't want it leveraged in the wrong way. So I think we would do that anyway, but I think you've raised a very good issue that should be thought about pretty heavily.
Any other perspectives on my legislation on this? Yes.
Congressman Royce, I think those standards that you've articulated make a lot of sense. I think historically the reason why they could not share in the past has been because the regulators and enforcement lawyers have said what you just alluded to. You can go to some countries where the controls are not that strong. So having it at a FATF or a FATF regional organizational jurisdiction, I think would give both comfort and structure to this, and could get us to a place of enterprise risk management, which we desperately need. So
and leverage them into similar arrangements.
Absolutely.
Thanks, John. Any other input there?
Just very quickly, Congressman, those are great interests. I just, again, point to the need for ownership at a tactical level of these issues. We have members in FATF. I was the head of the U.S. delegation of FATF for a number of years. There are members of that whole body that we are not very friendly with and that we have real concerns with. It's a good marker. Another good marker is reciprocity. Do you have to give to get? We need information from others as well. There are a set of factors that I'd be happy to work through with your staff to look at. These are factors of consideration the Treasury should be considering when certifying this kind of information sharing. I think that's smart, and it's going to be impossible to legislate that on a country-by-country basis. I think we need to delegate that to Treasury underneath criteria that I'd be happy to work with your staff.
Thanks, Chip. Thanks, Chairman.
Hey, gentleman's time has expired. The chair now recognizes Ms. Velasquez for 5 minutes.
Thank you, Mr. Chairman. Ms. Othfield, I share Mr. Roy's concern about developing methods for financial institutions to share information on SARs with their foreign affiliates and branches. However, I am worried about the civil liberty and privacy concerns that arise with the expansion of information sharing, particularly in the overseas context. What safeguards would you recommend to ensure that civil liberties and privacy safeguards are not eroded?
Thank you, Congresswoman. So right now, as has been said by others, there's information that banks can't share with other parts of the bank, much less its foreign counterparts, without risking a lawsuit. This doesn't make sense. And so that's what I think this part of the bill is trying to get at. For that reason, we support the effort to expand that. However, it's definitely worth taking into civil liberties concerns and scrutinizing them further. It definitely should be something that is looked at to make sure that safeguards are put into the bill, that it doesn't have any other kind of effects that weren't intended.
Mr. Fox? Yes. Mr. Fox, would you like to comment?
And information sharing. And I think the way we view it at Bank of America, and I think member institutions at the clearinghouse view it the same way, is that we're stewards of that, right? We have a responsibility to our clients and our customers to keep their financial data safe and secure.
Thank you. Yes. Thank you. Ms. Otzfeld, in your testimony, you indicate that we should be encouraging banks to incorporate new technologies into their compliance activities, but warn that it must be done responsibly. What technological innovations should we be encouraging, and what safeguards would you recommend?
Well, I think it's important to either task Treasury and the regulators to incentivize these innovations, because I think the concern is how will banks move forward with this. And the point is for them to look into this, to work with the banks on this, so banks at an early stage can be checking with the regulators to see what they think works for any particular process.
Thank you. Mr. Fox and Mr. Bly, in our letter to Secretary Mnuchin, Representative Royce and I also raised the need for law enforcement to provide feedback to financial institutions on the effectiveness of their SARs. How would you implement a process to provide financial institutions with feedback to improve law enforcement outcomes?
Thank you, Congresswoman. That's a really important issue. I really enjoyed that letter, by the way. Let me tell you, I think that this is why this is important. We get feedback from law enforcement and from FinCEN anecdotally, and that's always good to hear, right? It's always good to hear that you're actually helping. But to be honest with you, we don't get bulk feedback on our filings. Mm-hmm. The reason it's important is that we tune our systems based on our own decisions of whether to file, mainly, right? For other factors too, but mainly on those decisions. So if we've got those decisions wrong, we could be creating an echo chamber that just causes worse filing, right? You know what I mean? So if they could just give us a thumbs up or a thumbs down, you know, it's a little bit, if you've ever been through Heathrow and you hit the smiley face at the end of the security, you know, it's either a smile or a frown. If we could just get that kind of feedback about our filings, we could do wonders with tuning our filings to make them better, more focused, and then you would sort of separate that wheat from the chaff, if you will, and leave innocent customers out of that reporting. It would actually make us better that way. So we think that's a really important point that you raised.
Thank you. Mr. Bly, what is your take?
I concur wholeheartedly with Mr. Fox. It's exactly the scenario we have. If we can get information back, we can tune better, and we can deliver more meaningful information. That's the end of the story.
Thank you. I yield back, Mr. Chairman.
Gentlelady yields back to the chair. Now recognize the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman, and also Ranking Member for your work on this issue. I believe that the legislative proposals before us today largely represent steps in the right direction toward combating the abuse of our financial system by bad actors. Our framework is in need of an update, and I look forward to the testimony provided by all of you today, and thank all of you for being here. Appreciate it. My first question, Mr. Bly, and thank you for being here today as a representative of the Mid-Sized Bank Coalition of America. I appreciate your testimony. I look forward to your knowledgeable answers to my questions. Now, when considering a reform of this nature, or any legislation for that matter, the impacts a proposal will have on consumers and small businesses are a foremost concern of mine, since I am a small business owner of over 44 years and understand that the need to help Main Street, and I am Main Street, still own my business. As you are rightly point out in your testimony, community financial institutions are already struggling under the Dodd-Frank Act, and in the need for them to provide BSA and AML compliance can sometimes mean the difference between profitability and operating at a loss and even job loss. Further, in your testimony, you mentioned that all of the ideas in the bill have merit. However, one specific idea I would like to discuss with you is the proposed CTR threshold change. This committee should strive to provide regulatory relief for institutions while at the same time increasing the usefulness of information that you refer to. So what current resources do MBCA institutions devote to CRT filings, and what relief will the proposed rulings threshold change to $30,000 provide? And then what, we've talked about this, and then what relief will this provide to community financial institutions?
Thank you for that question, and I will give you information on the impact directly to your question. But I also want to emphasize that just changing the thresholds isn't the solution to this problem. It's part of a holistic package of making the information more meaningful and more significant, and we really applaud the broader solution that's on the table. But it is important to recognize that just changing a threshold itself reduces the size of that haystack of information that's out there. And for mid-sized banks, we estimate CTR filings would drop by 50 to 80%, and that was with the original $25,000 limit that was in the bill earlier. And SAR filings would probably drop by 8 to 10%. Structuring filings would drop. There's just so many, and that together represents about 10%, 8 to 10% of the staff within the BSA organizations that are just looking at the hundreds of thousands of CTR and small dollar report filings every year.
Okay. Another question for you. One of the problems you identify in your testimony is the high rate of false positives that are generated by transaction monitoring systems. One way the proposal before us seeks to lower that rate is by allowing for increased adoption and innovation in artificial intelligence software used by financial institutions in reporting. So how have mid-sized banks benefited from the innovative machine learning pilot programs, and how can artificial intelligence in reporting benefit financial institutions across the spectrum from large to small?
Yeah, this is particularly impactful for mid-sized banks because we just don't have the scale and scope to be able to spread the costs of analyzing the information that is just ultimately proved to be unuseful. A 90%, generously, a 90% false positive rate is really an unacceptable outcome for a successful program. We have been investing in the same kinds of tools that the large banks have been using, very high-cost, sophisticated tools, and they're generating more meaningful alerts to us, but at the same time, the tuning process and the regulatory environment that will analyze your tuning process to ensure you're not, that you're calibrating appropriately is just not, it's just not working. It doesn't get you to a lower false positive rate. And one of there's a number of ideas that have been put out with the mid-sized banks. In fact, we've worked very closely with the OCC to try and identify techniques that we could use. So it's both the tools and also intelligent ways of applying the tools. And the regulators have worked productively with us on ideas, but ultimately we don't know, and they don't know what's acceptable without good collaboration with Treasury, with FinCEN, to make sure that this is an acceptable application of the rules. So I think the moral of my story is that we're investing in the tools, but we need more collaboration in order to put that into practice and make the information that much more meaningful.
Thank you for your testimony.
Gentleman yields back, and the chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you, Mr. Chairman. This has been a very informative panel. And I'd like to let you know that I'm co-chairman of the Congressional FinTech Caucus. And I truly believe that there are both our Anti-Money Laundering and the Bank Secrecy Act, they offer great opportunities for our FinTech companies to come together, partner with our banks, and come up with some innovative solutions to this. And I think that if it's done right, they can both ease the burden on banks struggling to meet their requirements while also improving the job banks are doing at threat detection and risk management. It's a win-win situation. And Ms. Osfield, let me start with you. And as one graduate of the University of Pennsylvania to another, let me welcome you to your testimony to the Financial Services Committee. But after reading your testimony, I find that you agree with me about the use of technology. Now, in a couple of pages in your testimony, you say this on page 3, use of new technology should be encouraged, but must be done responsibly. a section of Treasury should be created or tasked with reviewing, approving, monitoring the use of new technology by financial institutions. There should not be a safe harbor provision. And you say that in 2 parts of your report. And then you also say that you're supportive of banks incorporating new technology into their compliance activity. However, we are not supportive of the sweeping nature of safe harbor positions. And quite honestly, I couldn't agree with you more on that. However, in Section 7 of this legislation we're taking in the Counterterrorism and Illicit Finance Act, my Republican friends want to provide an explicit safe harbor for financial institutions that use technological innovation to fulfill the bank secrecy's minimum and the anti-money laundering program requirements. So when you look at your testimony there, let me just ask you this, Ms. Osfield. Do you think that without the safe harbor, that banks would have an incentive to invest in these new technologies and partner with fintechs?
Thank you, Congressman Scott. Yes, I mean, I think something that could happen is Congress could direct the regulators to create innovation programs. This is something that could happen which would include consultations with the banks so that everybody's actually working together to come up with these new ideas, and it makes it clear to banks that banks are working with regulators early on in this process what they think will actually work to help them with their compliance obligations. I think it's something that could absolutely happen without a blanket safe harbor.
Well, thank you very much for that. Mr. Chip Ponson, can you comment on what actions Congress or the White House could take outside of the safe harbor that would ensure that financial institutions are implementing the latest advances in threat detection as they fulfill their Bank Secrecy Act and anti-money laundering obligations?
Thank you, Congressman. I do think that there are steps that both Congress and the administration should take, and I've elaborated those in my testimony. But I think the easiest way to understand this is technology is used in a lot of different ways in compliance. Think about this from the perspective of a customer experience. You walk into a bank, you're identified, you're verified. We use pieces of paper, we use independent databases to do that. There's a whole range of biometric technologies that are going to facilitate the easier verification that somebody is who they say they are. This is particularly important when you're dealing with communities that aren't necessarily documented, or parts of the world where identification and documentation isn't the greatest. There's that use of technology. There's a use of technology to collect, manage, and protect bulk data. That technology is exploding. It's the ability to manage that data in a way that drives analytics to identify patterns of interest. There are ways that we should be working to enhance that capability. And then there are technologies that can encrypt and protect that data to address some of the civil liberty concerns that Ms. Velasquez was talking about, Congresswoman Velasquez, that would allow you to access and analyze that data without necessarily getting into the personal identifier information that people are rightfully concerned about. So there's lots of different ways that technology can assist in compliance and risk management. To do this well, to do it strategically and methodically, I would argue you need two principles. You need somebody to captain the ship. And I think what you've done with the proposed legislation to start to put Treasury in a position to manage this and make them accountable with the authority to manage it and with the support of the administration from justice to the regulators is one approach, is one factor.
Mr. Ponce.
Thank you, Mr. Ponce.
Thank you. Chair would recognize Mr. Davidson now for 5 minutes.
Thank you, Mr. Chairman. Thank you to our witnesses. I really appreciate your testimony and your expertise in the field. I want to share Mr. Perlmutter's concerns about privacy and, frankly, the burden on small businesses. Unintended, perhaps, consequences, perhaps unavoidable consequences, but it seems that there are a number of ideas that could make this an easier way to accomplish the mission of securing our country, and, frankly, a more constitutional way. I'm very concerned about the information sharing apparatus. Frankly, the whole premise of BSA AML is in some ways deputizing a large swath of the private sector. So I'm also concerned about cybersecurity and a number of other provisions here. So, in a few short minutes, you can't cover all that. But, Mr. Bly, we've seen consequences of data breaches at Uber and Equifax and, of course, the SEC. But government databases are compromised, just like the SEC's was. What additional safeguards would be included in this bill to ensure that personally identifiable information of millions of American citizens are not compromised?
I think this is a critically important question for banks in general, not just related to BSA. We're collecting an intense amount of information from all our customers, and there's no doubt that cybersecurity and the ability to protect that data remains of the highest priority for mid-sized banks, and I'm sure all banks across the country. It's our belief that we're going to continue to invest in the tools that we need to protect our customers' data, whether this bill passes or not, and whether or not we modernize the BSA Act. But that was one of the main reasons that I believe the beneficial ownership rules should be done at a public sector level, because as it's currently structured, individuals, our businesses are supplying information to multiple institutions stored in multiple environments, and it's really in some ways creating privacy risk as opposed to reducing it. And so a central public sector model should allow for the ability to protect that more carefully.
What would someone's remedy be if they feel the ownership structure of their company has been improperly released or made public from this database?
From the central database?
Correct.
I think this is something we would have to manage, and that would have to be managed through the central infrastructure.
What would be the consequences? Is there anything in the bill where authorities at Treasury would contain, there's certainly criminal fines and penalties for businesses that don't disclose things. What about people that misuse the database? Law enforcement, banks, whomever has access. Are there penalties or fines for people that misuse the data?
I certainly didn't see that in the bill itself.
Is there record keeping to say who has misused it, whether they've been provided retraining or perhaps terminated, perhaps prosecuted? Is there anything that would keep records of that for people that have abused the access to this information?
I'm probably not the best person to
I haven't seen it in. I haven't seen it in there. And then there's the concerns about the nature of beneficial ownership. If you were asking who's the beneficial owner, most people would say who has control of the company. But that's not the narrow definition here. It's an incredibly broad definition, which doesn't even make it clear that it has to be an actual owner, someone who might exert influence. It could be a lender. It could be someone on the board. It is so undefined, it's hard to fathom that we would launch this as an actual law. How could we possibly narrow this definition and still accomplish our mission? So the panel, suggesting Mr. Pouncey.
Thank you, Congressman, and I certainly want to leave room for Ms. Osfeld, but I just want to say very quickly, Treasury is engaged in a 6-year rulemaking process, had unprecedented public hearings in New York, Chicago, Los Angeles, Miami, Washington, D.C., unprecedented in the 40-year history of the BSA, to get to understand what kind of a definition for beneficial ownership would work for customer due diligence for financial institutions. Is it perfect? I don't know that anyone says it's perfect.
Could they make it more broad? I mean, you say they've engaged in 6 years. In 6 years, they've come up with a definition that would be hard to imagine finding a way to write it so that it's more broad than it is today. Surely we can narrowly tailor this. The Fourth Amendment was very narrow. If there's probable cause, then you go get a warrant.
So the definition...
My time's expired, and Mr. Chairman, I yield back.
The gentleman yields back. The chair would now recognize the gentlelady from New York, Ms. Maloney, for 5 minutes.
Thank you. And thank you, Mr. Chairman and Ranking Member Perlmutter. This hearing is very important to me because I've been working on legislation to require disclosure of beneficial ownership information for almost 10 years. And this is the first legislative hearing we've had on beneficial ownership bill. So I deeply want to thank the chairman, as well as Chairman Lukemeyer, for working with me and Mr. Perlmutter all year long on this beneficial ownership issue. At the beginning of the year, I offered an amendment to the committee's oversight plan that said the committee should address this beneficial ownership issue, and Chairman Pierce spoke in favor of my amendment and said he would work with me on this issue, and he's been true to his word and has worked very productively on this issue, and I want to publicly thank him. Of course, the legislation package that we are considering today is just a discussion draft, and there's still some changes that I'd like to see made to the beneficial ownership piece of the package, but I'm really encouraged by the progress we've made. The issue was first brought to me by a really legendary district attorney Morgenthau in Manhattan, who was very famous for cracking a lot of difficult cases. And he said they could be tracking suggested or suspected terrorism financing, drug money, gun money, sex trafficking money, and they'd hit a wall when they hit the beneficial ownership, and no one knew who they were. Likewise, we've had problems with the CFIUS process, where they want to protect ownership in the United States from any element that might hinder our national security, and they haven't been able to find out who's buying or trying to buy sensitive information in the United States because it's in a beneficial ownership package. So I think that this is a very important tool for law enforcement, and it's been endorsed by many levels of law enforcement, and it would help us to protect our citizens and to help law enforcement do their job. So I hope that we'll continue to build support of it. So the very first question that I want to ask, and I want to ask it of everybody on the panel, just yes or no, and just go right down the panel. I just want to know, do you support this legislation or the concept of it requiring companies to disclose their beneficial owners to Treasury at the time that the company is formed? Just a yes or no answer. And Mr. Bly?
Yes.
Okay, and Mr. Byrne?
Yes.
Mr. Fox? Ms. Osfield?
Yes, we support your bill, H.R. 3089, and we think that the discussion draft is a good first step, but it needs some amendments.
Yeah, I do too. Mr. Pony, President and co-founder? Yeah.
Thank you, Congresswoman. I agree entirely with what Ms. Oswald just said.
Okay, thank you. That's a positive step forward. I'd like to ask Ms. Osfeld, you and I have worked together on this issue for many years now, and your organization, Global Witness, did a fantastic undercover investigation that was featured on 60 Minutes last year, where you had undercover investigators posing as corrupt dictators, and you had them approach 13 lawyers asking for help hiding money. We don't want anyone to know who we are, but we want to be able to have access, easy access to our money. And amazingly, 12 of the 13 lawyers agreed to do it using anonymous shell companies. And I encourage everyone to watch this clip. It's a very important one. And you would hear on it that they said, don't go to banks because they'll find out who you are. Go to the LLC, no one will know who you are. So my question for you is, what are the most important improvements that you think should be made to the beneficial ownership section?
Sure. For the bill to be fit for purpose, it needs to do three things. It needs to collect the right information, it needs to be accessible to the right stakeholders, and it needs to keep it up to date. Right now, it's not accessible to the right stakeholders, but because the definition has been asked a few times, any strong definition of beneficial ownership, for it to work, needs to have two prongs. You need to understand who actually owns it, as in shareholders, legal ownership, and you have to understand who owns the entity as in effective control. So this is control by other means. This could be by a trust, power of attorney, some other kind of way for controlling it, because you want to understand who is benefiting economically from this and who essentially pulls the strings, which isn't always the shareholder. So any definition needs to encompass both of those prongs, which both your bill and the discussion draft do that. The discussion draft was negotiated that it's not quite as strong as your bill, but it still does that. So we support the definition in the bill. However, it makes it very difficult for law enforcement to access this. Both domestic law enforcement, it says only federal law enforcement with a criminal subpoena. So this means state and local law enforcement does not have access to it, and it means parts of the federal government and federal law enforcement that don't have access to criminal subpoenas, that only have civil and administrative subpoenas, don't have access to this. So that's something that needs to change. It needs to be available for civil, criminal, and administrative subpoenas for state, local, and federal law enforcement. But it also makes it really hard for foreign law enforcement.
If I could get you to wrap up your answer, please.
It makes it very difficult for foreign law enforcement to access it, and you need to make sure that what we're sharing with foreign law enforcement is what we're asking foreign law enforcement in return to share from us, and it needs to be able to be entered in court. The other piece is there seems to be a loophole that makes it easier for foreign owners.
The gentlelady's time has expired. The chair would now recognize Mr. Budd for 5 minutes.
Thank you, Mr. Chairman, and thank you all to all our witnesses for joining us here today and for your time. I want to use my time to continue to discuss the Counterterrorism and Illicit Financing Act. There is no doubt that the Bank Secrecy Act needs an upgrade where efficiency along with safety is our ultimate end goal. And while there are provisions in this bill that need addressing, like the new beneficial ownership requirement found in Section 9, I'm hopeful that we can get to a good final product. So I want to talk through about the Section 7 of the Pierce-Lukenmeyer legislation that deals with technological innovation. And Mr. Bly, you stated in your testimony that the BSA is among the most complicated and costly requirements with which a bank must comply. And I agree this bill gives them some freedom to innovate in this space. So, but does this provision do enough to help with the community banks or the smaller mid-sized banks that you represent and the credit unions who don't have the same financial resources as the larger institutions to keep pace with the technological advancements that frequently change?
Thank you for that question, and I do think it does actually create the framework for supporting innovation. And there are ideas out there that do provide support for small and mid-sized banks that may be different than what some of the larger banks need to do. And one such idea that I discussed in my written testimony is a utility that we've been developing that allows for more collaboration and consolidation of BSA work and information amongst the banks with an independent utility. And we've developed such a thing, and banks are starting to look at how they can engage with it. In order to use a collaborative, independent utility, we're going to need support from the regulators, from Treasury, to say this works. And what that does, it allows you to benefit from the scale that you don't have as a small bank by using a source to manage many of the aspects of the BSA program. So that's an example that I believe is in the spirit of what this legislation produces.
Good, thank you. So the development of AI or artificial intelligence it's huge for AML and CFT. And this is to all the witnesses. Are there any technologies or advanced programs, or maybe it's even this utility that you mentioned, outside of AI that could be used to, or added to financial institutions' AML CFT compliance program that would enhance the detection capabilities of that institution?
Mr. Budd, thank you for that question. I think the answer is yes. In fact, I know it's yes. The key thing to remember about some of these advanced technologies and what we have learned after piloting a number of them is that you have to have experts right along with them, right? You can't, back to Mr. Scott's point earlier about FinTech. FinTech is great, but you've got to have the AML expertise along with FinTech in order to be able to make this stuff come alive. We think the biggest challenge for us presently to innovate is frankly that the amount of verification and process we have to go through to validate what we're doing on a step-by-step basis under the current regulatory guidance, which was designed, by the way, for large, complex economic models, not BSA AML, has really, really hampered us. So I can tell you, for example, in just adjusting our current thresholds in the innovation that we've done to date, we used to be able to do that in a matter of weeks. Today, that takes 9 months to a year because of the process of having to go through and prove the negative, if you will, that everything is working perfectly. I think there's a balance there that has to be drawn in order to be able to it's very, well, let me put it this way, it's very, very hard to innovate in a context like that.
Thank you, Mr. Fox. Anybody else on the panel?
Congressman, the thing that we've talked a little bit about, but not enough, in my opinion, is the regulators in this space. I think a lot of the problem in terms of burden and challenge has been sort of the moving goalposts. So to Bill's point, with technology, a lot of times you'll get second and third guessed by the regulators when you want to make a change. They talk a good game about wanting to support innovation. We need to call them out on that. They need to actually be, in these institutions and working with the institutions, and I can tell you, at least anecdotally, it doesn't happen as often as it should. So I think a lot of what happens in the BSA space is banks not understanding what the rules are, and rules are sort of being made up in terms of different exams, you have different requirements. So I think in technology specifically, this would be a good place for this committee and other subcommittees to push the regulators to say and do what they have expressed in other hearings. But this is a real problem.
Thank you. I believe my time has expired. Now we'll yield back.
Gentleman yields back, and the chair now recognizes the gentleman from Georgia, Mr. Latimer, for 5 minutes.
Well, thank you, Mr. Chairman. Thank you for this hearing, and I appreciate the panelists being here. Mr. Blay, I wanted to dig a little deeper into a subject that many have talked about here, the Bank Secrecy Act, especially the currency transaction reporting. Back when I had a real life before I came here, I owned a small IT business, and because of the unbelievable complexity of our tax laws, I was unwilling to handle my own payroll, because I figured it'd be better to pay somebody else to be responsible than go to jail myself, right? So fortunately now we're hopefully addressing the complexity through our tax reform. But during that time period, the way we processed our payroll, which was twice a month, is I would actually do a wire transfer to the payroll processing company, which always exceeded $10,000. Quite often, I was also purchasing equipment that I didn't have an account with or credit with a equipment manufacturer, and so sometimes we were wire transferring $20,000, $30,000 to buy a piece of network equipment. The point being is I generated a lot of transfers of cash in the normal operation of business, and since 1970, and it was set at $10,000, we haven't adjusted that. And we began looking at this early on in the year. And of course, if you look at the rate of inflation, we should be at about $60,000 today, which I have been strongly advocating for. However, understand we need to strike a balance between what is reasonable amount to not overburden our financial institutions and what doesn't handcuff law enforcement. And I understand that the chairman's bill has that set at $30,000. Now, I spoke with some of the community banks in my district, and they really support this approach, especially the $30,000 level. So I think I'm going to be able to be okay with that. One of them said that 78% of their cash transactions are below $30,000. Another said 92% of their cash transactions are below $30,000. A third community banker in Georgia said they had 21 employees devoted solely to BSA compliance. 21. That's a lot for a small community bank. They file 67 CTRs a day, but they almost never receive requests for information from law enforcement based on a CTR. So my question for you is, do you think that this $30,000 does strike that balance to give regulatory relief and provide law enforcement the tools they need?
We believe it does. We don't get the information back to know how useful it is, so it's very difficult for us to put a hard statement on that. But what we think is important is whatever number we choose here, it's got to be accompanied with logical adjustments to the way in which this process works. There's one of the facts that we learned from mid-sized banks is it takes over 4 hours to file a SAR, to create the work on each individual one with $150 a month in one small bank. The amount of time to deliver the information is so difficult, is so time-consuming, and moving to a structured and maybe even fully automated approach for delivering data rather than free text format and a story about the local company that's moving money totally legitimately would really be a benefit. So I think most important is 30,000, 25,000, they all seem like very reasonable numbers in today's dollars. But most important is that the program efficiency and effectiveness accompanies that, and there's a difference between the larger dollar and the smaller dollar.
What are the typical transactions we see that are below 30,000?
They're essentially the same types of transactions, but they could be ice cream parlors that are open in the summertime, moving money back and forth between branches.
Similar things I experienced in my business.
It's all the same kind of local businesses that are wondering why this is a question for them.
Another area that I've really been focused on here is when it comes to a cybersecurity concern, which is a grave concern right now. And when I was in the military, I worked in intelligence, and we lived by an adage, which is you don't have to secure what you don't have. Would this actually lessen the amount of data that banks are keeping on customers, reducing their risk in a cyber, and even passing on to the federal government, which is, of course, a grave cybersecurity risk, in my opinion?
It may reduce the number of detailed investigations, but all the data is still there, the systems are still there, and it's delivering alerts. It's just a difference with how much time is spent on the lower value-added information. And the goal of all of us is to focus the maximum attention on the things that matter most. But under the current program, we spend the same amount of time on everything.
Okay. Thank you, Mr. Chairman.
Expired. And Chair now recognizes the gentleman from Arkansas, Mr. Hill, for 5 minutes.
Thank the chairman. Thank the ranking member for this good hearing. And it's good to see that the committee is considering a complete rewrite of our bank secrecy and money laundering. We don't want to rush into it since 1970, so it's good that we're taking it up now. And Ms. Maloney has had her decade of work on the topic, which I appreciate, and going on 3 years, I feel her pain 3 times over, I guess. I want to go back to my favorite subject with Mr. Ponce. Mr. Fox already know what it is, which is my feelings on the beneficial ownership provisions in this bill. I'm not a fan of yet this different approach, and I understand and I appreciate the efforts to move away from the financial institution burden and try to, again, streamline it and take a different approach, but I still find it concerning, and I just want to have some dialogue on that, and since I'm toward the end of the questioning, you're well rehearsed on it. I still say the same comment I made about the Treasury's rulemaking that's proposed, which is 25% standard. As a former banker for 30 years is too high. I mean, it's ridiculous. I mean, if I'm going to now structure a transaction to avoid you, it will be under 25%. Thanks for telling me what the roadmap is. I think this definition is better in the sense that it has this broader definitional context on control, and yet then that becomes hard to measure and hard to define and makes the definition more murky, which I share the concerns I think Mr. Perlmutter mentioned at the top of the hearing, that it's overly broad, hard to get our arms around. And it also has these new exceptions, nominee, custodian, agent exception. And yet, of course, that's the prime way that people use to structure an LLC to avoid detection is through an agent process. And yet you do catch them maybe with substantial control, but that again adds a lot of burden to the process. And then you have this exception on if they have an operating premise as a physical office in the United States, they're accepted. So now we'll just quickly buy a pizza company and run everything through the LLC with this, quote, physical presence exception. So I just want to challenge our creative process on this. I do like the idea of the filing concept and the sharing of the data. And I want to go back to my idea again. We're smarter. We've got to be able to figure this out. We have all this data on the 1065 that every entity in this country files. and we ought to figure out a way to use the existing tax filing as a way to meet this test. So I would ask everybody, would you, if my filing, my 1065 with FinCEN, would that comply with this information? Forget the definition for the moment. Would you find that an adequate disclosure, Mr. Ponzi? You're the great author on this, so I yield to you.
Congressman Hill, you're being too kind. Look, you've been one of the most provocative thinkers on this, and you made, when I was at Treasury, you made us better, and I really appreciated it. I can tell you what I was trying to say to Congressman Davidson about the rulemaking process. For exactly the points that you've raised, a lot of this requires the type of dialogue and the type of expertise that a rulemaking is designed to do, right? And so, and the flexibility that that affords and the ability to make adjustments that do not require congressional legislation is critical. So delegation of some authority to Treasury is going to be key, whether on CDD, which we've done, or whether it's on company information as legislation proposes. That delegation is the starting point. Second, when you look at definitions of beneficial ownership, for exactly the reasons that you've explained, we have this challenge of clarity versus structuring around that clarity. And one of the key issues in this 6-year rulemaking process that may attend how this definition ultimately is formed was the notion of 25% is a floor, not a ceiling. There are higher risk scenarios where financial institutions will be expected to go below it, and they do. FACA is a good example. It's a 10% floor on FACA. It's a whole separate conversation, but it's a floor, it's not a ceiling. Second, no matter what the ownership is, you always get a controlling officer for precisely the reason of you can structure under any threshold. So law enforcement was very clear in saying, not just in the United States, but globally, we want to make sure that there's a natural person at the end of the investigation that we can squeeze and say, you need to start answering questions. This the rulemaking from the rulemaking from Treasury is designed to do exactly that. It's not necessarily directly.
Let me reclaim my time because I want to cover. And Mr. Chairman, Ms. Maloney had a minute 25 over. May I continue?
Ask Mr. Yes. Tipton. You're delaying him. Go ahead, Mr.
Thank you for that. So I hear you on that, but I also want to get one other topic in here, which is the issue of the impact on our secretaries of states on all these exceptions. I know there's a 2-year period for implementation here, which isn't satisfactory to Ms. Osfield for very good reasons, I think. But this is, shifting burden also to our secretaries of state. Our forms in Arkansas, we don't take into account all these exceptions. There's no place for that. And I would really urge you, as you work with our staff, to think through how can we take the existing data that we have in a secure format that's already machine readable, to use the IT term, in the 1065 form, where we have K-1s, we know the ownership, we know the name, we have a responsible person, we have a tax filer, we don't have an agent, we have principals, and find a way to let FinCEN access that data. And thank you, Mr. Chairman. I yield back.
Gentleman yields back. The chair now recognizes Mr. Tipton for 5 minutes.
Thank you, Mr. Chairman, and thank the panel. I guess maybe everything's been asked, but not by the same person each time. So do appreciate the comments that you've made. This has been, I think, a very interesting conversation. I come from a rural district, and a lot of the issues that we face are faced by our community banks. And we've had testimony from Chair Yellen on down in terms of some of the impact in terms of actual compliance. I think we also face in rural areas like mine the real issue that we're having actually with illicit finance going on, with drug trafficking, cartel activity that's going on. Certainly want to be able to address it, but also to be respectful of the burden that is put on our financial institutions. And Mr. Bly, in your testimony, you'd spoken to the CDD rule, which is going to be becoming effective, I think, in May of this coming year. And would you maybe speak to how that's going to have some real impact on some of our smaller community banks? I'm very cognizant, a small rural bank in my town just visited with the president of it, and he said, hey, good news, we've made 3 hires. Bad news, they're all compliance. It's not to certainly diminish the importance of this issue. My home county is one that they're now looking to be able to designate, and we're trying to encourage this just from a law enforcement standpoint, a high drug trafficking area. It's a corridor. moving through. But can you maybe speak to the proposed rule and then maybe Section 9 in the draft bill to be able to get your thoughts on it?
I think that when you think of it from a community bank perspective, it really points to the challenges of the current model, because it really applies the cost and the burden on everybody exactly the same way, on every institution the same way. All want to collect whatever information is necessary, and they'll do it. But the reality is they're going to be asking questions of their customers, not only on day one and opening an account. There'll be new process. Those customers will be asked at any institution that they're going to. And it will, and then they'll need to be asked and refreshed and constantly updated throughout the course of time. And then that will support the investigation and analysis down the road where needed. And the idea of a centralized structure basically eliminates the burden on the individual smaller institutions and levels the playing field, allows everybody to have the right information available at all times. And so it's just a better model that affects the smaller institutions more than the bigger ones.
Right. Mr. Fox, do you have any comments on that?
Yes, sir, Congressman, thank you. I have a lot to say, I guess. I think you're right. I think one of the things the Clearinghouse supports is the notion that a Treasury study on the BSA sort of writ large and how it's actually being implemented. Part of that is, does it really make sense to treat community banks in the same way that you would treat a gatekeeping bank like Bank of America? And today, while the regulatory efforts are different, certainly, I can probably attest to that, it isn't, in a lot of the ways, the same rules apply, right? And so we ought to think about that. We ought to really think freshly about this. Do these things have to be filed on forms, whether they're electronic forms or not? Can we just get data? It's a lot easier for banks to do that sort of thing. I think on the beneficial ownership, I really agree with Mr. Hill. I think that, look, we all agree, or at least I think most agree, that this information is really important for law enforcement purposes. We think that this is how organized crime and transnational organized crime organizations game the system, right? And even state actors, I think, probably game the system through these entities. So it seems to me that the best way to do that is we already have a structure that's working in the code. The problem is we can't share it with anybody because of the code provisions that prohibit sharing tax information. So could that go to FinCEN? Actually, the Treasury rule, while we supported it when it was going, and we're happy to go comply with it and get the information we have to get, the reality is that we actually are getting we're chasing the innocent a bit here, because to be honest with you, if I'm a criminal, there's no way I'm going to have an ownership structure that is going to get caught in that net. So we really got to kind of rethink this a little bit, I think, and I think one way to do it is to make that repository, the Treasury or FinCEN, so that law enforcement can access that data. By the way, law enforcement can't get at this data without a subpoena right now. I can't just give this beneficial ownership data to law enforcement wholesale. That's customer information that Graham Leach Bliley protects, and there's no Bank Secrecy Act exemption for that unless it's suspicious, or law enforcement has a subpoena to get it. So we think there's a lot of thinking that could go on in that, where you could probably weave a way to take some of that burden off and actually make this a lot more efficient, and for not only the banks or the financial institutions, not only community banks, but for the entire panoply across the entire regime, which is, in 2017 is what you want, right? Think about it. We're filing narrative reports on terrorism. It doesn't make sense. I think you really need to think about how the regime itself is set up and how it's working, right? And that I know that the Clearinghouse stands ready, and Bank of America stands ready to do anything we can to work with the staff to do that.
The gentleman's time has expired. I'd like to thank all of our witnesses for your testimony today. You've been very gracious with your time and with your answers. We thank you for that. Ms. Ponce, I hope that you have gotten sufficient information for your article today. So thank you for joining us today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I'll ask our witnesses to please respond as promptly as you're able. This hearing is adjourned.